numbers of TCS are out. We have a couple of details with us. As far as the profitability is concerned, it's a tad bit lower than expectation at 11,390 crore because the street was working with an expectation of around 11,550 crores. Ditto can be said for revenue as well. The number has come in at 59,160 crores. We were expecting a number in excess of around 59,300 crores. So not too bad a number coming in, but nonetheless, it's lower than what street was expecting. Remember, for TCS this time around, more than the numbers, the expectation is really banking much on what the revenue profile for next year is going to be like, because this year, for the 9 months gone by, they have been clocking a revenue run rate of around 18%, 15%, but the question is whether the double-digit growth will continue into next year or not will be really critical to watch. We're waiting now to get more details as far as how the margin has panned out and how other verticals have been, but it looks like that the margins are a bit lower than expectation. The street was expecting there is going to be a 50 basis point improvement in the margin. That's come in just at 24.5%, and that can also be explained by a bit of a margin, a bit of a top line miss coming in. Though margin disappointment is something that the street will watch out for, because the management commentary during the year was the fact that they're going to exit FY23 with a margin profile of 25%. So that has not happened. As it is for next year, the expectations are lower, and the aspirational band that the management has of 26 to 28%, of the margin really gets pushed further, because in the first half of the year, it's expected it's going to be a bit of a low growth that is expected. And so far we have the basic numbers. We don't have the press release as of now. The basic numbers do suggest a bit of a miss coming in from TCS this time around. The consolidated revenue at 59,160 crore, profit at 11,390, lower than expectation, and the EBIT margin too at 24.5%. We have Omkar Tanskale joining us to make sense of these numbers. Omkar, your first reading of the estimates, margin at 24.5% and the profit coming in at 11,390 crores.
Yeah, I do not have the Q-on-Q numbers, so if I get it, so we can Q-on-Q growth numbers in terms of revenue, so that I just have it.
Yeah, so Omkar, I'll tell you the top line growth has come in at 1.6% and the margin is flat quarter on quarter.
Yeah, it is more on the expected side. We were expecting around the same range, and the TCS reported strong set of, the same set of numbers in line with the expectations. The margins are still believed, but I am not worried about the margins though, as it is going to be streamlined going ahead, because supply side constraint are we can see of easing line. The more important from my side is the outlook going ahead, the vertical commentary that is coming from the management, and the deals that they have won in the quarters.
But what's your expectation, Omkar, with respect to the deal pipeline? Will you be disappointed if the number is lower than, let's say, an $8 billion mark? What are you banking in there?
Yeah, I'm expecting around $6 to $8 billion, the band between $6 to $8 billion of the deals that they have won. But major concern is that how many of the clients is seen or they are seeing the engagement for the quarter and going ahead. There might be a concern that there might be a delay in terms of decision making, and they can delay the IT expenditure or automation for the next couple of quarters going ahead. So that may be the key issue that one should trigger upon. One should see upon.
Sure. Let's welcome on board Sandeep as well, Sandeep Agarwal, to make sense of what his take is on the numbers. Sandeep, your call as far as the earnings are concerned, because it looks like 1.6% growth is lower than expected on a sequential basis. The margin hasn't improved, and so far we are waiting by for the commentary because there's no press release at the moment.
Yes, I think there is a slight disappointment, because remember this quarter there was a benefit also of the currency front. So I think, it is little below what was expected, and also on the margin, I'm surprised that, with attrition numbers pulling off, why there has been a dip in margin. So obviously we need to wait a little more to see other data points. Two things: one on the outlook front, and secondly on the margin front. What is there anything which is unrelated or temporary in nature. That is what we are awaiting. Let's see. We don't have much details right now, but prima facie, it looks like little miss on both fronts.
Yeah, looks like a bit of a miss coming in on all fronts as far as the numbers is concerned. I'm just waiting by to get more details, and I think I have them at the moment. Let me read out some more details coming in. As far as the constant currency growth in FY23 as a whole is concerned, it's coming at 13.7%, and the full year margin profile has been at 24.1%. The TCV for FY23 stands at $34.1 billion, and if you look at the constant currency growth coming in this quarter, it is at around 10.7% on a year-on-year basis. Let me just run you through some more details coming in. As far as the global employee headcount is concerned, at the end of the year, it's 6,14,000, and the net additions in the quarter gone by is 821. Remember, in Q3, there was a decline when it comes to headcount to the tune of 2,200 employees. So now, this time around, at least there has been an addition, albeit a tepid number of 821 as well. The attrition has come in at 20.1%. So there's a drop of almost 120 basis points, so a substantial drop as far as attrition is concerned, and the number is coming at 20.1%. I'm waiting back for more details as far as what TCV is looking like, because the order book of the quarter gone by was around 10 billion. So that's quite a stellar number coming in. The street was expecting that it is going to be around $8 billion. It's actually coming at 10 billion. And geography wise as well, on a year-on-year basis, UK is up 17%, North America is up 10%, and even continental Europe has shown a growth of around 8%. Sector-wise speaking, BFSI is up 9% on a year-on-year basis. So there is a bit of slowdown when it comes to BFSI, but not by a whole lot. And the TCV for the full year stands at around $34.1 billion. Because it's not about the quarter gone by, it's about the impending quarter that the street is waiting for. Whether, there is going to be an improvement, whether FY24 is going to be in a year where the first half of the year is going to be slow, but there is going to be a pickup in the second half, is what the street is waiting out for. I don't have the official constant currency number yet, but the expectation is, what we infer is that it's coming lower than 1%, and that compares with street expectation of around 1%. And remember, the constant currency growth over the last many quarters has been between 2 to 4%. In the year gone by, the constant currency growth was as high as around 4.4%. That's come down materially to sub 1% level, and that is telling you the kind of slowdown that the sector is facing. And this is as of now when the BFSI sector contagion rally hasn't panned out completely. So we're watching out for all of that, and the management commentary in the next few minutes will be fairly important. But for now, it's a miss coming in from TCS this time around. The revenue is lower than expectation. Yes, there is a bit of a positive surprise when it comes to the deal wins, but we'll have to see whether it is sustainable or not, because going forward, there is a bit of a disappointment on the headcount addition front as well. And as far as the BFSI sector is concerned, it seems like it's slowing a tad bit.